Government advisor. 3 factors have stripped the parallel exchange market of its price influence and diversified our financial reserves. The Prime Minister's economic advisor, Mirza Mohammed Saleh, confirmed that the stability of the price structure and the decline in annual inflation rates in Iraq are the result of the success of 3 integrated economic policies that worked in a coordinated manner within the framework of the state's general economic policy. Saleh told Al Furat News that the fiscal policy has contributed significantly to supporting prices through the general budget, whose expenditures constitute more than 13% of the gross domestic product, noting that this support has been reflected in expanding social safety nets through food baskets, fuel price subsidies and support for farmers, in addition to providing wide-ranging government services. He added, monetary policy, in turn, has achieved tangible success in maintaining the external value of the dinar by controlling domestic liquidity levels through the introduction of electronic payment systems and increasing demand for foreign currency at local banks via their correspondents abroad. This has contributed to reducing financial transfer times and implementing compliance rules related to money movement risks. Saleh pointed out that the third of these policies was price defense through the establishment of a hybrid market network, which provided a wide supply of goods at stable prices and directly impacted the local market by creating price competition that reduced opportunities for speculation. As a result of these 3 factors, the effects of the parallel exchange market, the black market, were neutralized, especially with regard to generating inflationary expectations, the effects of which gradually faded, he said. He explained that there are commodity stocks available to the state and the private sector, some of which have a shelf life of 3 to 5 years, particularly with regard to spare parts and durable goods, which enhances market stability in the medium term. Regarding the increase in gold reserves, Saleh explained that this is a successful monetary policy tool for diversifying Iraq's foreign reserves portfolio, noting that gold represents a safe haven against fluctuations in global exchange rates and interest rates. He added that this diversification, which includes various foreign currencies and monetary gold, is based on precise international standards to protect the country's assets from value fluctuations between currencies. Regarding the impact of OPEC Plus decisions, Saleh emphasized that Iraq is part of the international consensus within the organization regarding oil production levels, and that the national oil policy enjoys significant flexibility that enables it to maintain export levels within Iraq's quota, thus mitigating the impact of lower oil prices on public revenues, and how this could relate to other speculative currencies like the Vietnamese dong, VND. I'll clarify it step by step, then connect it to the RV talk. What did the advisor actually say? Mirza Mohammed Saleh, the Iraqi PM's economic advisor, outlined that 3 coordinated economic policies, fiscal, monetary, price defense, have stabilized prices, lowered inflation, limited the parallel, black market, exchange rates influence, strengthened Iraq's foreign reserves, including gold. The official exchange market is now stronger and more dominant than the black market, which used to distort the real exchange rate. So, they are claiming that the official rate is stable, credible, and well defended. How does this connect to the Iraqi dinar RV narrative? Reality. RV stands for revaluation. Many people, especially online, believe that Iraq will suddenly revalue its currency, for example, that $1 might suddenly become worth 1 IQD, or that the dinar will rise massively in value overnight. What the advisor's statement really says: Iraq's actual policy is focused on gradual, managed stability, not sudden shocks. The exchange rate is kept steady through budget subsidies, tight monetary controls, stronger reserves including gold, compliance with international banking standards (AML), correspondent banks. SWIFT. Iraq wanted to massively revalue. It would contradict the entire Point of keeping prices stable and controlling inflation. A huge, sudden RV would cause massive price distortions, unpredictable capital flows, economic chaos. So the official line, as confirmed here, is that Iraq is using orthodox tools, budget, gold reserves, price supply chains to keep the exchange rate stable, not to shock it upwards overnight. What does this mean for the black market rate? Iraq's parallel market was often higher than the official rate. People bought USD at black market rates to bypass restrictions. Speculators used this as evidence that the dinar was undervalued and could RV big time. What Salah is saying? The black market is now largely neutralized. Official channels, banks, payment systems, correspondent banking are stronger. So there's no longer a wide gap driving speculation. And the gold reserves. Iraq is adding gold to its foreign reserves. This diversifies its assets. It reduces risk from dollar or euro fluctuations. But it doesn't imply a trigger for a sudden currency RV. It simply makes the existing exchange rate more robust and credible. How does this relate to the Vietnamese dong VND? Some online groups link the IQD with the idea that the Vietnamese dong will also RV. However, Vietnam's currency is managed by the State Bank of Vietnam to maintain export competitiveness.